Let's be real. If you've been anywhere near the stock market in the last year, you've seen the absolute explosion in anything related to AI. It's been a wild ride. But lately, you might have noticed things are getting a little shaky. So let's break it down and figure out what is really going on.
So this is the question on everyone's mind, right? Is the AI stock party over? After that insane run-up, the market's definitely getting pickier. It feels like the days where you could just slap AI on something and watch it double, well, those days might be fading.
And to really get what's happening, you gotta start with the company at the dead center of this whole universe, Nvidia. I mean, they make the chips that power basically everything in AI. So how they're doing tells us a whole lot about the entire sector.
Okay, get a load of this number. In just their last quarter, Nvidia's data center business, that's the division selling all those AI chips, pulled in an absolutely mind-bending $41.1 billion. Just let that sink in for a second. That is an astronomical amount of money.
But here's the crazy part. You'd think they'd be popping champagne, right? Well, not exactly. Wall Street was kinda unimpressed. Because that massive number, it was just a tiny bit short of what they were expecting. And that, plus some worries about future sales to China, was all it took to make people a little nervous.
And this quote from Goldman Sachs just nails it. When expectations are literally sky high, when everyone expects you to walk on water, just, swimming really fast doesn't quite cut it anymore. An inline quarter, which is amazing by any normal standard, suddenly feels like a bit of a disappointment.
Okay, so this is super important to understand. This story isn't just about Nvidia anymore. What's really happening is that the AI market is splitting right down the middle. We are seeing a very clear separation between the winners and the losers. And this chart just lays it all out. On one side, you have companies like CoreWeave, which is pure infrastructure, and Palantir, a software company that's all in on AI, and they're just crushing it. But then you look at massive established players like Salesforce and even Apple, and they're down for the year. The days of a rising tide lifting all boats in AI are definitely over.
So you gotta ask, right? If Nvidia is selling all these billions of dollars in chips, who's actually buying them? Well, the answer is the biggest companies on the planet. We are smack in the middle of a full-blown AI arms race.
And the scale of this is just staggering. I mean, look at this. In a single 3-month period, you've got Meta, Microsoft, Amazon, and Google spending nearly $100 billion together on the data centers and chips needed to power AI. It's the ultimate picks and shovels play.
And they're all playing chess here, making these huge strategic moves. Microsoft is building its own AI models so it's less dependent on others. Meta is launching its own AI apps while also just pouring billions into startups. Everybody is trying to carve out their territory. But yeah, not everyone's sprinting at the same pace in this race. A company like Apple, for example, has been seen as a little bit behind the curve. Their stock has been struggling this year, and you can feel investors just tapping their feet, waiting for that big, wow AI announcement that shows they're truly in the game. Now, all of this spending by the tech giants is creating a huge problem for a whole other part of the tech world, the classic software companies. For years, they had a super profitable, simple business model. But now, AI is threatening to flip the whole table over. Think about it. For decades, the playbook was easy, the per-seat license. The more employees a company had using your software, the more money you made. But now, here comes the fear. What happens when one single AI agent can do the work of 10 or 20 or even 100 people? That could mean companies need way fewer paid licenses. And that's the existential threat that's got stocks like Salesforce and ServiceNow stumbling.
Okay, so that's the lay of the land right now. It is complicated, it's messy, and it is moving incredibly fast. So the big question is, where are we going from here? What should you be keeping an eye on?
All right, if you want to know where this is headed, here are the key signals to watch. First, that big tech spending. If you see that slowdown, that's a huge red flag for the chip makers. Second, keep an eye on export rules to China. Those can change the game overnight. And finally, watch the competition. If companies like AMD and Broadcom really start to eat into Nvidia's lead, that tells you the market is getting a lot more competitive. And here's another really important shift to get your head around. Right now, it's all about training. Think of that like building a massive, expensive factory. But where the real long-term money is going to be is in inferencing. That's the cost of actually running the factory 24/7, day in and day out to produce all the AI stuff we're going to use. That's the recurring revenue. And that really brings us to the final multi-trillion-dollar question, doesn't it? The biggest winners in the long run might not be the folks selling the chips and the servers. It might just be the person or the company who takes all this unbelievable power and builds the next killer app, the thing we can't imagine our lives without.
Keeping up with these huge market shifts is absolutely key to navigating your own finances. To learn personal finance easily and get latest personal finance updates, make sure you subscribe.